If you haven't heard of these small company stock opportunities yet, you're not alone. These three small company stock picks have big potential but above average risk. XPEL. Its automotive products are money savers. Viad. COVID-19 nearly killed it, but it's on the rise again. ELF. Beauty. It's taking on the biggest names in beauty and winning. Let's dive in. Here are the three promising small company stocks to buy for a profitable second half. Welcome to Timely Investment Research. In late January, Canadian investment firm CI Financial published its 2023 outlook for small-cap equities. It was extremely bullish about small company stock opportunities this year and beyond. It is our belief that small-cap equities present a generational opportunity as we enter 2023, the report said. Small caps significantly lagged large caps in 2022 due to a perceived flight to safety. The sector now trades at a large discount to the market. While small caps got off to a strong start in 2023, the regional bank crisis put a damper on their bullish momentum. Yet, as the report notes, the stock market is forward-looking, and if the view becomes the worst is behind us, this will quickly become a very attractive asset class once again. I'm not a soothsayer, so I can't tell you if this in fact has happened. However, regardless of what comes next, I don't think it's a bad idea to have some promising small company stocks to buy on your watch list. After all, the last time small cap stocks led Ben Carlson's periodic table of asset classes was in 2016. They're bound to break out at some point. Here are three potential small company stock winners. Number 1. XPEL. XPEL is a provider of paint protection film and automotive window tints with a market cap of $2.1 billion. With cars getting more expensive by the minute, the company's products are invaluable to car owners looking to maintain the resale value of their vehicles. The company reported first quarter results on May 9. Earnings per share of 41 cents beat the consensus estimate by 4 cents. More importantly, earnings were 46.5% higher than a year ago. On the top line, revenue grew nearly 20% year over year to $85.8 million. We're off to a great start in 2023 with solid first quarter results, Chief Executive Officer Ryan Pape said. We continue to see good momentum in our business and remain focused on driving growth as we move through 2023. From 2018 through 2022, XPEL's compound annual growth rate for revenue was 31%. If it continues on this trajectory, it should generate more than $400 million in 2023. At the same time, its gross margins have improved by 894 basis points since 2018. That ought to count for something with investors. While there are only 3 analysts covering XPEL stock, according to MarketWatch, they all rate it a buy. And their average target price of $96.33 is 27% above where shares currently trade. Number 2. Viad. I was a bit surprised when Viad showed up on my list of small cap possibilities. With a market cap of $452.9 million, it verges on microcap status. I had completely lost track of the provider of hospitality and leisure activities, experiential marketing, and live events after its business got crushed by the pandemic. In first quarter 2019, it had revenue of $285.6 million and a loss from continuing operations of $17.8 million. In first quarter 2021, revenue had fallen to $28.9 million with a $45.4 million loss from continuing operations. Frankly, it's amazing the company still exists. On May 4th, Viad reported first quarter 2023 results. Revenue of $260.8 million was 83.4% higher than a year earlier, with a $21.3 million loss from continuing operations. We're off to a great start in 2023, and I am excited about the rest of the year as we expect the momentum to continue, said CEO Steve Moster. Our actions to scale Pursuit, transform GES Exhibition's cost structure, and strengthen Spiro's capabilities are positioning us for strong growth in revenue and profitability. I'm not going to sugarcoat it. Viad is not for risk-averse investors. However, with shares down 12% year-to-date, the risk-reward proposition for aggressive investors is excellent. In August, shares traded as high as $44.25, more than double today's price. Number 3. ELF. Beauty. If you're a hockey fan, you know that the NHL playoffs are underway. You also would know that several teams are currently on a heater, which is sports talk for a winning streak. If ELF. Beauty was a sports team. Its shareholders would say it's on a heater. After a massive run, the maker of reasonably priced beauty products has a market cap of $4.8 billion, which makes it a large small cap or a small mid cap, depending on who you ask. Shares are up 62% year to date, 300% over the past year, and 365% over the past 5 years. In mid-February, I recommended the small cap growth stock because it was giving Estée Lauder, a company that I really like, a run for its money. It wasn't cheap then, and up 20% since my video was posted. It's not cheap now, valued at 9.7 times sales. By comparison, Estée Lauder trades at 4.6 times sales, but it still may have room to run. In March, the company partnered with American Eagle Outfitters to produce a denim-inspired makeup and skincare collection. It's a perfect collaboration given both firms focus on reasonably priced products. It will be interesting to see how it does. The company is scheduled to report fiscal fourth quarter and full year 2023 results on May 24th. It expects full year revenue of at least $541 million with adjusted net income of at least $75.5 million. Now that it's profitable and expected to grow sales by nearly 40% annually, the sky's the limit. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.